Everyone, welcome back to Management Accounting course. The first module in Management Accounting deals with meaning, importance, scope and limitations of Management Accounting. So for a better understanding about Management Accounting, we need to refresh our knowledge in Financial Accounting and Cost Accounting. You may think, why? Because there is some information is beyond the scope of cost accounting and financial accounting, and this paved the way for emergence of management accounting. Before we start our discussion on financial accounting, cost accounting and management accounting, first we will try to find an answer to two questions. The basic question, that is, what is accounting and why do we need it? Let us try to find an answer to the first question, that is, what is accounting? Accounting involves the collection, recording, classification and presentation of financial data for the benefit of management and other stakeholders. So, that means the accounting has to do with collecting, processing and analyzing information. Here comes another question. It is all about questions, right? Okay, anyway, the question is, what kind or type of information we use in financial accounting? And the answer is, it has to be a financial data, or it has to be financial in nature, which means the transactions which are measurable in monetary terms form only a part of accounting. Then who are the parties going to benefit from this? Yes, the management and other stakeholders like shareholders, creditors, bankers, government and so on. Now let us see our second question, that is, why do we need accounting? Well, the answer is very simple. Accounting helps us to use the past in order to take an action in the present and for future. The word accounting can be classified into three categories, that is financial accounting, cost accounting and management accounting. So first let us have a brief discussion on financial accounting and cost accounting so that you will get an idea about why do we need or go for a management accounting. Then after that we will have a detailed discussion on management accounting. Right? Okay, so first we move on to financial accounting. The objective of financial accounting is to find out the profitability and to provide information about the financial position of the concern. So, two principal statements are prepared in financial accounting, that is, the income and expenditure statement, which is our P&L account, and the balance sheet. The income and expenditure statement or the P&L account is prepared for a particular period, say a year, and all revenue transactions relating to that period are included in the statement with a view to determine the profitability of the concern. Well, in the case of balance sheet, it is prepared on a particular date and it determines the financial position of the concern on that date. So the basic difference between the income and expenditure statement and balance sheet is that in the case of income and expenditure statement or the profit and loss account, it is prepared for a particular period, for example like for a year, while in the case of balance sheet it is prepared on a particular day. For example, if he says that the balance sheet of X Limited as on 31st March 2019 implies that it shows the financial position or the financial performance of X Limited as on 31st March 2008, means on that particular date. In this example, that date is 31st March 2019. Now we will move on to the next aspect, that is functions of financial accounting. The first one is recording of information. As we all know, accounting is an art of recording financial facts of a concern, and we have already seen what is this financial fact or financial data or financial information. Moving to the second one, that is classification of data. Classification of data or information means that the data of one nature is placed at one place. So in financial accounting, this is done in the book called ledger. For example, if we are running a firm or a company or a business, we may have accounts called salaries, rent, interest, advertisement, etc. So these accounts will be opened in the ledger under their heads, and all entries relating to these accounts will be posted into these accounts. Then move on to the third function, that is making summaries. So here the final accounts, that is P&L statement and balance sheet, are prepared to find out the operational efficiency and financial strength of the business. Next one is, it is dealing with financial transactions. So as we discussed earlier, in financial accounting, we record only those transactions which are measurable in terms of money. So money is taken as a common medium, and all economic transactions are expressed in terms of money or in monetary terms. Anything which cannot be expressed in monetary terms does not form a part of financial accounting, even though it has a significant bearing on the working of the business. Next one is interpreting financial statements. So interpretation part is very important in accounting. Why? Because it is helpful in decision making. Then last one is communicating the result to the management and stakeholders and making information more reliable and useful. So these are some of the functions of financial accounting. Yes, even though this kind of functions are performed in financial accounting, it has certain limitations too. And these limitations actually leads to the emergence of cost accounting and then management accounting. So now we will see these limitations one by one. The first one is that it is historical in nature. So in financial accounting, the impact of future uncertainties has no place. Why? Because it is a record of all those transactions which have taken place in the business during a particular period of time. Then moving to the second limitation, that is, it provides information as a whole. So the financial accounting, in financial accounting, the information is recorded for the whole concern. Then moving to the third limitation, that is, financial accounting is not helpful in price fixation. Suppose I am running a company or a business and I have produced a product and I want to fix price for that. So what all information is required in order to fix a price for a product? We should have an idea about the variable cost, the fixed cost, direct cost, indirect cost, and so on. So shall we get all this information by going or analyzing the financial statement? No. If you want to get this kind of information definitely you have to go for cost accounting, or by referring the cost accounting or the cost sheet report, then only we get this kind of information. So this is why, or it acts as a limitation of financial accounting, and this limitation of financial accounting actually leads to the necessity of cost accounting in a business. The next one is cost control, also not possible with the help of financial accounting. If you want to implement or execute cost control, definitely the company should have a cost accounting. The next one is appraisal of policy is not possible. So being a company, sometimes it takes some strategic decisions like introducing a new product or discontinuation of an existing line of production, or the company want to go for diversification or expansion. So this kind of strategic decisions sometimes a company want to take. So in order to take this kind of strategic decision, what we require, we need data that is to be analyzed and to be interpreted. But financial accounts cannot provide this kind of necessary information for taking important decisions. Why? Because the information is recorded in financial accounting for the whole concern. So that is another limitation of financial accounting. The next one is it records only actual cost. So sometimes the present price of asset may be absolutely different from that of the recorded cost, but in financial accounting it does not take into consider this kind of price level changes. It records only the actual cost of figure. The next one is it records only quantitative information. As we have seen earlier, in financial accounting we record only quantitative information, which means only those transactions or information that can be measured in terms of money, or it can be expressed in terms of monetary terms, only taken into consider in the case of preparing financial accounts of a company. The next one is, of course, financial accounting is a technical subject. So a person who is not conversant with accounting subject has little utility of financial accounts. And the last one is there are chances of manipulations. Sometimes the financial accounts of a company may manipulate it in order to suit the whims of management. The manipulations like overvaluation or undervaluation of inventory, or showing less profit to save from tax, or not paying bonus to workers. So in order to serve this kind of purpose, sometimes the company may manipulate its financial accounts. But if they perform this kind of activities, then definitely the credibility or the reliability of the business will reduce. So this is all about financial accounting. And remember one thing, that the limitation of financial accounting actually leads to the need and necessity of cost accounting. And we have seen some of the limitations also, like the cost control is not possible, cost fixation or the price fixation is not possible with the help of financial accounting. And due to this kind of limitations, the next accounting, that is cost accounting, become relevant. And regarding cost accounting, we will have a detailed discussion in the coming video. So this is all about for today. Thank you.